Number of questions arising from our chat the other week about investments and the best way to handle our assets. So what are the best options for a small investor who's willing to take a bit of a risk in today's market in Spain, the UK or Europe? Say Jan and Ian in Gandia.
Well, it wouldn't be the UK or Europe, it would be the US. Have you seen the video? It's the first company to
4
hit
trillion
market value.
That's bigger than the GDP of France, isn't it, I think?
It's worth more than the entire output of the UK.
Wow.
So I would say AI is a good place to invest. I think everyone will agree with that. Obviously, be a bit selective on what you're to invest in. Also, you could do a tracker. You could do a FTSE tracker. You could do an S&P. You could do a Dow Jones tracker, or even a Nasdaq.
So, what is that exactly? That just follows
it just tracks the indices, and you can get what's called ETFs, exchange traded funds, and they're very, very low cost because every fund has a cost inbuilt into it. It's called the ongoing cost, OCF, and it can range from 1.9% down to 0.2%, and there's a huge difference there. And if you pick something that's a passive, that's what we call a passive investment, because it's just literally following an indices, the costs are a lot less. So I would put some money in one of those, or as I said, look up AI and invest some money in AI.
How are we on pharma? Because that's in post-COVID was looked like a big thing to do, big pharmaceuticals.
It's quite volatile. But yes, there's always going to be demand for that. That is never going to die down. So that's another thing you could look at as well. As I said, the UK, I wouldn't be looking into that now, unless you want to go in for the long haul. You know, you can buy things cheaply and you want to sit there for 5 years or more, then obviously go in there because things are cheap at the moment. People are pulling their money out. So you can get, UK smaller company funds are a lot cheaper. You can, invest in mid-cap or whatever, and you can get that a lot cheaper. If you want to take that and hold it for a while, if you want to make money and see it growing, then I would suggest, as I said, something to do with AI or the American indices. You can even look at Europe. If you look at the IBEX, that's done very well. The CAC and DAX are, they're okay. They're not that volatile.
But they're not volatile, but they've not been very strong, have they? Not a lot of movement. They've been quite weak recently. We hear pretty much all the time that all of the problems that the economies of France and Germany are having. Traditionally, the big powerhouses.
But hopefully with Germany, if the cost of fuel comes down, that will mean the cost of the manufacturing goods will come down, and hopefully we'll see some more positive news coming out of Germany. France is a bit of a mess, same as the UK. I can't really say much on that one. But there are things, most people at the moment, obviously the markets do go up and down. So if you're one of these people that worries every day and you look at the markets, please don't invest in equities because you might have a heart attack. But most people now know about volatility and understand that things can go down as well as up. And if things do start to go down, the worst thing you do is panic and sell. You hold on and then you get the rebound and it will come back up. You just have to hold on. The unfortunate people that can't hold on are those that are drawing down from their savings or their pension, and they need to sell stuff to fund their income. But even then, I would cut back on that when things are bad and increase the amount you get when things are good.
They did say they were willing to take a bit of a risk. Is AI not considered to be as much of a risk anymore, or is it still a risk?
Oh, it's still risky.
I would have thought so.
Oh, yes. Because all you need is someone to say something, or someone come up with a cheaper product, as we saw before.
Indeed.
And then the price can fall. But NVIDIA seems to have the market sort of cornered. We'd have the Chinese coming in a little while ago and said they'd got cheaper alternatives.
They're chip-based, aren't they? NVIDIA, yes. They're chips, yeah. So, okay.
So yes, but there are things out there, and if you've got a little bit of money and you don't mind the risk, then go for it. You've got Bitcoin, which has reached record highs of $112,000. Well,
no, there's volatility for you.
There is volatility for you. But we've got gold. People went into gold and the price of gold is falling. So, it's very, very difficult. As I said to anyone, when you're investing, you need to diversify. Unless you can do it 24/7, there is no point in trying to time the market. So, I'll go in today and when it hits this, I'll sell. You've got to be on top of that. investing is for the medium to long term. You need a diversified portfolio, and then it should even out across the peaks and troughs, and in the end of the day, you will make money.
What about this from Peter in Denia? Both the US and UK top banking officials are warning of instability amid Trump's tariff wars due to be imposed on the 9th of July, now the 1st of August, of course, unless deals can be done by then. Should I be worried, he says? What can an average small investor like myself do to mitigate the impact of all of this?
No, don't be worried. Just sit tight and just hold on. As we saw when he first announced tariffs, markets went down. I got various emails from people saying, Donald Trump's this, Donald Trump's that, and I won't repeat the language. And yet, when he stopped doing them, the markets are now, higher than they ever were. So what I have to say is just sit tight. It could be a little bit bumpy, but I think we saw the main shock when he announced them first a few months ago. Mm-hmm. So I wouldn't worry about
Liberation Day, as it was known.
Yeah, Liberation Day. But I would just sit tight, definitely. Don't worry.
Sarah in Benny the Lage asks if her QOPs of around 270,000, so this was obviously before, as you were mentioning now, no QOPs anymore, but will it be enough for her to manage into her old age? She's only got limited state pension contributions and early 60s. She did tell me exactly how much, but I won't say. But single and rents an apartment, working full time at the moment, but would like to stop soon. Wouldn't we all?
It depends how much income you need to sustain your lifestyle. Mm-hmm. On 270,000, we would usually say don't take more than 4 to 5% as income per annum, because you're trying to keep your capital intact. So, on average, investments, if you're a balanced investor, your portfolio will grow between 4 and 5%. So you're looking about 13,000, and I'm assuming her pension is in sterling, 13,000 sterling a year. If that plus what she's going to get for a state pension will keep her going, then yes. But what you've got to understand is the main thing is to preserve your capital, so not to eat into it and take out ad hoc amounts. And you've got, when the markets go down, you may eat into your capital, but then hopefully once they rebound, that will gain back again. It depends on what lifestyle you have now. In Spain, as we know, you don't need as much money as you do in the UK.
Certainly not as UK, but certainly more than you used to have to.
Because rents have gone up considerably.
They are ridiculous,
It is ridiculous, and I think the government should just stop blaming tourists for the lack of affordable housing.
Well, there are a number of different ideas and a number of different schemes, including using some of those properties that have sat empty for ages from the Sarev Bank, which is at last. I mean, they've been sat there empty for all this time. Why have they not done this before?
There's lots of things they could do to help with the housing problem, and we've seen that if you're, in our area, we've got a major hospital, and they're having problems getting staff because the staff cannot afford to rent or buy houses nearby. Whereas a few years ago, houses were dirt cheap, rent was dirt cheap. So there are things that the government needs to do. But with regards to Sarah, she really needs to work out what she needs to sustain her current level of her lifestyle, and is she happy with that lifestyle, and if that money, £13,000 plus a state pension, will keep her at that level, then yes, she can afford to give up work, or else she have to take a drop in her living standards, or she can carry on working part-time for a little bit longer.
Right, OK, thank you for that. Just before we go to the break then, I know we've mentioned this before, haven't we, equity release. Jim in Javier says, is it viable in Spain, or is it better to downsize and invest the equity that you have?
The only thing I've got to say is downsize and invest the equity you have. Equity release in Spain is a minefield. There's been so many court cases over it. So I would advise anyone, if possible, downsize, invest your equity to give you a rate of return that you need, and keep it like that. You've got some tangible asset at the end of the day, that if you need to sell it to go into care, or if you want to leave it to someone. If you do equity release, you haven't got that asset at the end of the day usually.
Mm-hmm. All right, finally, since the pandemic and the recent power cut here in Spain, people have been saying we should have some more cash to hand just in case. But how much cash should we have at home? Name it supplied, but rather not tell everyone because of the nature of the question. I understand, yes.
That is a tricky one. I've been saying for ages, cash is king. We saw what happened in Spain, and we see when, one of the banks in the UK has a glitch, you can't get hold of your money. How much you should have? that depends obviously how much money you've got. Some people might not, but I would say I would keep maybe 500 or so in cash, but obviously in a secure place or somewhere where people can't find it. Because if power does go out, or if we do have a glitch for a few days, at least you've then got money, you can go out and do things.
And I would say in smaller notes as well. You don't want to keep a Bin Laden or even hundreds or 50s,
No, you need smaller notes.
Yeah.
And also, people are saying digital currencies. We want to have digital ID, we want to have digital this. No, we don't, because then if something goes wrong, you've got nothing. Cash has always got to be king, and I think the younger generation, it does worry me because they're so used to having Apple Pay on their phone. I've got my daughter staying with me, and the other day her boyfriend was going to play football and he needed €5 coins. They didn't have any because all their money's on their Apple Pay or whatever they're using. And I said to them, haven't you got any cash? They went, oh no, we never have cash on us. And I thought, oh, for God's sake, just get a grip. And I just wanted to slap them around the head and send them off. And I might do that actually, slap them around the head, because they're so caught up in this technological world. If they haven't got their face in their phone, it's on their iPad, and they just assume that that's the answer to everything. No, that would be the downfall.
We're not too far away from having a chip in our arm and a heads-up display, walking around with a virtual screen in front of us.
I hopefully
Christina
will be dead if that ever happens, because that will be the end of the human race.
I bet you it really can't be that far away, I tell you.
It will be in my world because it's not happening.
So big tech then, AI, perhaps something that people might want to look at, especially for future investments. But
yes.
But what are you advising people to look at the moment if they come to you, got a little bit of a nest egg or maybe a surplus in their pension fund?
Well, it depends what people want. You've got some people who come in and say, look, I don't want to take any risk. And then you'll put them in a fixed deposit with a capital guarantee. And for sterling, you can get 4% or above. Euros, obviously, it's less, it's 3%. And that's usually for 3 or 5 years. So you can fix it, it's capital guaranteed. You'll get that interest accruing, but you're fixed in for those years. If you take it out, obviously, you'll get a penalty. For low risk, there are some products that try to iron out volatility so you don't see the big swings up or down. Some people like to take a bit of risk, especially the younger generation. I've got some young investors in their 20s, early 20s, and when I talk to them, they just want to try and make as much money as possible. They don't care if it goes up and down because they've got lots of years to recoup that money. And that's another thing, it depends on your age. If you're in your 20s, statistically, you've got 50 odd years or more.
It's not quite on our side, though, is it?
No, if you're in your 60s or 70s, then any money you put in a risky investment, you've got to not need that to sustain your living at the moment. To be, it's got to be surplus to requirements, because if something happens to it, then you are stuffed. But most people now understand volatility, as I said. They understand diversification. They understand that markets aren't going to always go up. People get lulled into this false sense of security when they see the FTSE going up, the S&P going up, and they forget the markets do go down again. And as I said before, the worst thing you can do is something it does fall is panic. Just sit tight. It will come back. If you look at statistically over the last 100 years or more, it's always bounced back, and it's bounced back to be worth a lot more than it is now. So there is something out there for everyone. So if people are interested in investing, even for their pensions, there's always those sort of things for pensions as well. We've got things where they're capital guaranteed, where they've got some risk or they've got high risk. So whatever people want, we can do.
Excellent. That's great. So we're none of us part of the world's richest 1%, whose wealth has increased by 33.9 trillion since 2015. Okay.
I wish.
Of course, you'd love for somebody who is to get in touch, but that probably is not what's going to happen.
That must probably freak me out, because they must probably want tax avoidance or tax evasion, and then I'd feel really bad. But no, if you want to get in touch, you can email info@blacktowerfm.com. You can go on our website, blacktowerfm.com, and fill in a contact form. If you put BayRadio Christina. But remember, we haven't just got offices in Spain, we've got them across Europe, in the UK, in the US, in the Middle East. So if you need any advice, we should be able to help you.